Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, August 13th, 2023, a little after 1 p.m. here on the East Coast. I'm Wayne. My partner, Ryan, is traveling. He's somewhere in Italy with his family. Finally, it's been a long time. I'm really happy for him and his family that they're getting a chance to travel together. And so we are still going to get the market outlook overview, out for the week. But the good news is for Ryan, he's finally getting a break after many years of busting it on market outlook on the weekend. So here we go with the trusty disclaimer. Excuse me. Here we go with the trusty intellectual property rights notice. Allergies getting to me just in time, but they seem to always do. And then here's just a quick flash of this week's stream, which if you did watch Macro Measure, you already know this is just one little update because I've been having my tech issues again today. It's been another big battle between Windows 11 update that happened without my authorization somehow, and then AMD video card update. They don't like each other so far, and I can't figure out how to resolve it. Anyway, so I'm just sticking with let's get this done so we don't miss out on a chance to record it if these problems crop up again. The only thing I would tell you right now, though, just in big picture, is that I would expect more of what we saw over the past couple of weeks until we don't get it, with the only real qualifier, as always, being, well, who knows what news comes out. But more importantly, right, it's the second half of August, and things can either get listless or they can get a little crazy. So it's really a month that way, mostly listless in the second half in my 30 years or so. But every now and then, the second half of August can be one to remember. So let's get out of that share. We'll switch over to another share. We'll talk about the more important stuff because we are talking sector situation here. So let's get the right screen going, and that should be our grid of 12 to start out with. I think we're rolling on that, so let's keep going. And this is interesting in that, right, we've tried to identify what's been strengthening, what's vulnerable, what's weakening. That's what we typically do here, or just take cues about the market from here as well, right? When a lot of sectors start to fire, or leadership sectors, or laggards, right? We use this in a lot of different ways, but excuse me, recently I updated some trend lines. I don't like to keep too many trend lines on these charts because they're all tiny and they can get overwhelming. It's hard to look at everything, but a lot of things got close to established trend lines. And so we added those, and you can see just on a quick look that, some have fallen beneath trend, some have managed to hold trend. And it's an old Austin Powers, it's a mixed bag baby kind of thing in terms of sectors, but let's go through them methodically. What's interesting is that the oil sector, or energy sector, I really should say, XLE, that has maintained that strength that we saw starting to crop in. I would say about a month plus ago. At this point, it started to perk up right about a month ago, somewhere around there, 3 weeks to 4 weeks, that it put that higher low in. That's continued to be the case. The only problem that I have right now with that is just the overextension, right? I'd say on some of your intraday charts, it started to get a little toasty, right? But it's certainly, we talked about it possibly breaking out, right? And you can see it's taking out our resistance level at 87 and change. And so it did put a nice initial thrust together. And we've had some good bullish paper, and we've had some Rebel Pit ideas that were in there, and they've all generally done fairly well. The only problem is there weren't enough of them. I really wish we could have seen more. For some reason, there just wasn't as much UOA firing. So that could be good in a way if that's sort of still disbelieved. In other words, it could, with not enough participation, it might have more room to run when more people decide they're going to climb on board to that. But anyway, we'll look at all these on a larger view, but that's really just something worth noting. Another thing I think worth noting is technology, right? We know this has been a big deal, right? It's almost always a big deal in the modern market. It should be, makes sense, right? But look, it's starting to lose the trend, just like we said in SMH, which I'll try to remember to cover. And we'll go back through these things. But yeah, I mean, honestly, right there, it kind of tells you that a big dog is missing from the equation. Hence, right, the QQQs falling below the 50. And again, that could be a bear trap, though. We'll see. The communications have really held on well. You know, they've done better, as you can see, than the XLK. So those stocks, you could say, well, that's really good. They're showing strength where a lot of other tech isn't, and it is, right? So if this thing gets back on its feet, you might have a rebound trade in tech overall, but you might have a continuation trade on strength in these communication stocks. So something to keep in mind. But if this is going to be more of a laggard that will catch down, right? If this market really unravels, eventually they'll find the communication sector and they'll start to hit it. But since it's been strong so far, it could be one of the last to really fall. So I wouldn't pick a fight with it and stick with it if the market's not dropping just quite yet. Financials, this is becoming a big deal, right? We were fortunate, much like with energy, we saw at about the same time near here, I would say, like in this case, it's more than a month ago. Maybe it was actually, I'm sorry, it was right about here. So about a month ago, a little bit more, where things started to put in that first higher high that took out that former high. Then we had the higher low, and we started noticing that, you know, they could run into earnings. They did. Energy was doing something similar at the time. And those are two of the sectors we really like to see working, and they weren't working for the longest time compared to other ones, and they finally joined the party, as did XTN in a bigger way, the transports, which is another one that's important to me. But these are now, right, if we look at those two other important sectors, those are at risk of losing this trend line. I know a lot of people aren't big on trend lines. I think they're really a big deal personally, but you know, it's always to each his or her own. But that's a support line that was solid. It kind of represented the trend there. You had a false breakout, they reversed it. And so that looks rough, right? That looks rough to me in transports. It could turn out to be rough here in financials. I do think loan demand is slowing down. That's not something you want to see if you're really at the start of a new bull market. In my recollection, anyway, just even common sense. Excuse me. Boy, my allergies always get me at the wrong times. Then we've got another, I think, in the modern economy, very important, real estate. And so XLRE to me, right on the support line. And now they did hold it. We got to give them credit. A lot of these things have held up, but this thing starts to unravel. That's really a big problem as well, right? So if you look at the juncture that we're at, it's, to me, you're not at this wonderful risk-free juncture. That should be very obvious, right? You're at a time where as I said last week, I spent a lot of time on a lot of different tabs last week, not so much this week, because I think, you know, we did a pretty solid job last week if you follow our videos in macro measure. But this week I did some and did a little review on them. But geez, I mean, it's not one of those times where the market is going to be, in my opinion, be aided by a lot of news. Now, things can come out of the blue. China is notorious for that, right? Where suddenly, you'll see big China news that will ignite things, right? Obviously, with that being such a large economy on a global basis. So there you have it there. But as far as things go here, this is good that it held up, and maybe, right, the XLRE will hold trend, and maybe it's sort of finding a cluster low here that it will rally from. Maybe there's some positive divergence or some other good technical sign showing up. But the point is, it's the proximity to risk, right? Where these lows are not all that far away. You're only one bad session away from taking them all out. And when you start to see, I think, if financials continue to give up the ghost, XTN transports do, and then this does, that is just not good. Now, a defensive sector that we were wondering if the week prior it would finally start to perk up, it did the week after. And that's the curse, I think, sometimes for a lot of people that do the kind of work that we do, where you kind of know what should happen, but you are always, it seems like you're always a little early, and so if you, that's why I think you got to use the charts for your timing, right? Because if you would have said, yeah, they're going to start coming after defensive names when this market gets in trouble, well, they did this week, but the prior week or week and a half was really rough, right? So, but those are looking okay with a higher low and a higher high relative to this high. So this is still working its way up as of now, and it looks like one of the better sectors. And that's really not something that I think, in terms of the overall market scheme, that's not something that's comforting. Maybe there's a double top there because it won't be able to keep going, and you'll kind of get this M pattern that just really rolls over. Let's see. That would probably that could happen if the market really finds support and doesn't crack. Another thing that's right near key support is XLP, the staples, and so those would typically do better right in more of a risk off relative to XLY. And you could say they have or they haven't. It's not really that definitive right now, but right now XLY has been somewhat volatile. Big pop up, came back off. It's above support, right? The recent support right near that low, but it's not right. Not at the moment, not moving back up, trying to take out this resistance up near here, right? So to me, that one is unresolved. Like it's still got the incoming uptrend, and as long as the market holds trend, it doesn't crack. I'd give it the benefit of the doubt if it can start taking out resistance. But as of right now, I think it looks a little concerning and we'll look at this a little more closely. But XTN, again, I already talked about that. That to me is not a good sign. Remember, there's a gap down here. There's a lot of gaps in the individual components. So not a good sign in my opinion. Basic materials, we were worried about these rolling over potentially more if they crack support. They're starting to really crack that support level. That could be a problem, right? And there's clearly gaps here. Remember, these were somewhat late to join the party, right? And we were waiting for them as companions to maybe finally get going with some of the other sectors we mentioned earlier. XLI had been a good leader, really at the same time they came in for both. It was doing very, very well and hanging in there better than most sectors, really through the prior week, not last week, but the prior week. They finally came after that a little bit, but I think it's still above support for now on my chart. So I'm calling, let's call 107 your level, 107-ish. So it starts cracking there and market looks risk off. Yeah, I think you probably trade down a few points from that 107 and change for starters, just a few percent, and then we'll see what happens. But you got to be a little concerned about this sort of topping pattern at the moment in this kind of a market. So again, not a good sign. They've had an incredible recent jam. A lot of those stocks in there got a little haywire to the upside. Caterpillar, I think I mentioned that we decided to go against trend because it got so stretched, and I think it worked out fortunately, but bottom line is not my style. But I think you had to step in because of the degree of stretch that was in there. And then finally, for thoroughness, we cover utilities, but these have been struggling, as interest rates continue to, I think, ascend. And we talked about TNX as the focal point right now in the macro measure video earlier. So that's what we're keeping our eye on. Let's get to better charts on all these though, and I'll try to add a couple others in. So I'll start out with energy, and I'll try to bring a few more things in here. Just a few extra comments on the larger charts if they load. But yeah, we were saying, I think, that if it broke through that one resistance line here, which I'll highlight in blue, that it could maybe continue to go and work its way up. And I still think it has room. So it's kind of one of those tough ones where it's starting to get overbought on some of your lesser charts, some intraday charts, not really so much on bigger charts, but the daily itself, as you can see right here, right, that's at 73 and change, maybe 74 if you round. So that's there right now. Greg has done a great job of pointing out, right, that trends and levels, right, you can stay very overbought. And probably the poster boys, they used to say, for that right now is MPC. And this has just been utterly remarkable, right, where if you go back to 17th, so you're looking at nearly a full month, there's been one close lower than the prior close to this point. Just a remarkable upside run. And that RSI is at 91 nearly, so that's excessive, right? And I don't know what's driving that, but you get the point, right? It's very extended on that basis. So getting back to XLE, I think you have to start being a little careful here. I think the kind of easier money in this intermediate term trend probably has been made. I do still think there's room, for one more solid push. Who knows, right? I'm just talking in general. I'm talking most of the time, right? Just from my experience. I think there's a chance this keeps going a little bit longer, but if it did, I just be careful on that. And that does have unique characteristics, right? Unique factors there that you've got to follow that are part of the whole energy market experience. But on a bigger picture view, let me see if I can do that, because this is an important sector. But if you look at the bigger picture view, this thing, after having a nice run here, it's been consolidating for some time. And until it gets through here, it's really stuck in consolidation. But if you go all the way back to this high and you look at, right, how long this thing's been consolidating for, we're talking about over a year. And so if this busts through here, after, right, the incoming trend on that is up clearly, right? If we go back a little bit further in time, you consolidate for a year and you start strengthening towards the tail end and you break out, that is probably going to it's going to be probably really good for energy stocks, but I don't know how good that would be overall for consumers. Although, right, the factors there you'd have to sort out that are unique to the energy market. What's the real cause or what's driving that? But if it's global demand, that would obviously be, a really good thing, right? If demand is really high, because somehow these economies, despite all these concerns, manage to get their act together and really roll. Here's the look at crude. Here's the look at crude. There it is. But let's get back to more of a daily on that. I think or swims. I don't know if it's the AMD experience. I just can't I can't get my computer to get out of its own way lately. It's just after those updates were done. But yeah, you could see that's bumping up against that high. It started to pull back a little. Probably can't really argue with that it maybe should pull back a little bit more and then maybe try to go. But you can see that there's an attempt to change that trend. You can see that the intermediate term trend has really shifted, right, over the last couple of months, almost 2 full months. So they're trying in there. Can they get through is the big question. I think there's a little bit more room, just like with XLE. So I think that is giving us a good sense just in there. But XLE has been the real standout. I mean, that has been the real standout sector, I think, overall to the upside. In terms of the technology, right, XLK, this has been struggling, and this relates to the Qs and it relates to SMH. And you can see this has fallen. You've got your rollover of all your shorter term SMAs in your 10 in white, light blue is your 20, and then red is your 15. They're rolling over, right? They're now starting to collide with your 50. You're below the 50. You're below one of my support lines that I've had there for a while. So that's a problem, right? And the issue, though, is did this become somewhat oversold? I would say, look, it did. On some intraday views, this became oversold. So again, much like with QQQ, I would say, did it really get smoked? Not really. It didn't really get crushed in terms of oversoldness, but did it get close enough that it's justifiable that the gang could manufacture a rally? And I think the answer on that is yes. I wouldn't rule out a little rally attempt, especially earlier in the week. I just don't know, if I don't know if that'll happen, period, but I don't know if they'll gap it down and then work it back up. But usually when you crack something as big as former support line, like a highlight in blue that I've got there, and the 50, which is right at basically at the same place in gold, Usually they try to tap on that from the underside, not too long after they plunge below. Then, if they get it back above there for a day or two, potentially, that really brings about a lot of pain for those fresh shorts and folks that just couldn't wait to crack the 50 to sell it, that kind of thing. So that's where the bear trap comes in from in terms of the macro measure discussion earlier. And remember, this whole thing could be a bear trap in the sleeper scenario that I talked about for most of the year. Now, I dropped that because where I thought they would potentially launch that from was somewhere around here, and this started to decline a little bit after that, but they just kept going, right? So my idea was this wouldn't get that far. I wouldn't rule the scenario out. It's just that my version of it didn't play out the way I thought, and that's not uncommon, right? It's very hard to nail exactly what the scenario is going to be overall consistently, but that tells you, I think, right? I think there's more to fall here. I think, if they risk a rough month here, that's a problem. But we're only halfway through. So far, the correction's been relatively modest. It's not been something dramatic, but I do think there's a chance for a little maneuver back to the upside before they let things go. So we'll move on from technology, stick with something similar, but that's communications. And you can see this is probably this hasn't been powering up like energy, but as far as holding on to things, they've done, a great job in XLC. So this thing really doesn't want to give it up. It's been hanging in there better than most sectors. In other words, it's definitely better than most sectors that were performing heretofore to this point. So this thing's held on pretty well, but it's obvious that there's vulnerability. You can just see, right, that you're starting to maybe roll over in your SMAs, the shorties. You could end up much like other things, right? There's a flat line right near the 50. If we go to the 50, we look back to the left, you can see that there's highs, there's lows, there's closes right near there. And so it just stands out to your eye that that's probably going to be a support level. So, as of right now, given how strong it is, I think it probably holds up, and I just expect the 50 to provide support, unless it's completely risk off for some really rough geopolitical reason. But otherwise, it's a relatively strong sector, hanging in there better than most. And if they somehow get this market back on its feet, this one, if you want to catch the rebound trade, get something that got pancaked. If you want to catch I still think it's a strong sector and they're going to keep going with it, this is probably a safer trade than catching the falling knife reversal style. But either way, there's opportunity. XLF, let's look at that a little more closely. And so I think XLF is hanging in there fairly well too. You really can't say too much bad about it. Was it after the run that it's had over the past few months? Is it due for something? Yeah, and they held on to it pretty well. So is there a little bit of maybe more to come? I would think that ultimately there will be, but I certainly won't rule out an attempt to start moving things back up a little bit. So again, not a sector that's in jeopardy yet. You'd have to take out Friday's low. And that's the hard thing about Fridays, especially in the summer, and especially these days with all the options to trade. You don't know, was that really supportive? Was it a good little sort of turnaround there, or did this have to do with options expiration? It's harder to read when you get thinner conditions, and you tend to get those in August. But overall, it's not something I would hate at the moment, right? There's other things you can probably find to hate. You might, in fact, hate XTN a little bit more than you hate XLF, because this is starting to weaken more. There's definitely gaps back here. We could probably find more if we spent time on it. But the good thing about this right now is it did get, I think, oversold on some intraday views. Not all or many, but just a few that matter to me. And so I do think there's a chance they try to do a little something here earlier in the week. But the 50 is probably it. And like I said in the other video, you should, I think, keep your eyes on the TNX. And if the TNX and the market are trading pretty inversely, it's kind of telling you probably that the market's keeping its eye on rates. And if rates continue to power up on that 10-year, that could be a problem. And if they're ignoring it, they're ignoring it. You can try to ignore it to an extent, but eventually if they keep going, I think the market will have to reckon with that. So XLV, now this is another one that, you've got to say, well, hey, that's not too bad. It's not really too far removed from the most recent highs. And those are some of the highest highs that were registered in months. And I think this one also is hanging in there really well. The problem, of course, is this is more of a defensive positioning situation. So if this is doing well, that might mean that there's more defense being played. And again, probably suggests slightly at the very least that maybe there's rougher sledding if they're going into that kind of a space, right? Looking for those kind of more stable performers. Another one that maybe falls in that category somewhat would be XLP. We like to look at that versus XLY and see how those staples are looking versus the discretionary stocks. And this hasn't been that impressive, right? It's kind of a little bit of a mess right now. Overall, it wouldn't take much to crack the 200 there in purple, which is just about where the 50 is. So that would be kind of a double banger where they would crack quite a few things there. And so maybe technical traders will be brought in. Notice that this low is definitely lower than here. So that does look a little concerning overall. If you look a little bit bigger picture, it sort of looks like, hey, if this cracks, and I could just drop a nice line under there for us right now. Again, it won't be perfect, but you'll get the general, I think, idea. I would probably drop out of that one right there, and I would probably put one right about there. And so that grabs a couple different things. It just slices through one wick, but you still have the 5,200 there. That's probably the bigger deal. But if you do crack that, you get a risk off phase, right? I think there's a whole nother leg down after this consolidation that we've been in, which again, in retrospect, a lot of these things end up looking like channels. Almost always, you'll look back and say, well, that thing traded in the channel. But if that channel cracks, right, for real, that's probably suggests, right, that you're probably heading down. I don't know from there. I would probably say that, well, obviously the first level is going to be somewhere, big level would be near 72 and change, but probably 70-ish is a big deal. Right near a lot of those lows would be 70, 71. But yeah, you get the idea. That does look a little challenged to me. That's a little more messy on my charts. So take it for what it's worth, but they're not going defensively there. That's a little interesting. And XLY really kind of reasserted itself a little bit in some ways, despite sliding off, right? The fact that it kind of held in there as well as it did allowed it to kind of perk up a little bit on some of the things I like to look at. And it held the 50 and bounced. And like I've said many times, right, I think, and Ron Ianieri, our departed friend, he made a good case of this all the time. He would always remind people there's a reason why we call it support, and expect support to support, right? Usually the first time you get to it without a really strong driver, it probably will. And it did, at least momentarily there, right? So like a lot of other things that got near the 50, you would probably expect it to at least try to rally from here a little bit. Kind of fits with my got a little bit towards overdone. Maybe they put an early rally together, and then if it rolls over from there, it might have a chance of cracking. Although you just don't know what you're walking into, right? You don't know what you're walking into on Monday morning yet. There could be a driver there that nullifies that, and that's why this game is not easy. But that thing's holding in there pretty well overall. I think there's more downside coming in there. If I had to force a view that's a little bit longer term, that makes more sense in terms of how I think about the market right now. But you got to just be objective in the here and now. And in the here and now, it held for now. So if it tries to rally a little bit, you got to see what it does at the 20 in light blue. And then otherwise, if it can't get up and above there and reverses back down, that's not good. Another big sector for me is real estate. And I think this is starting to get concerning, right? Because this matters so much to the modern economy. And this is, again, it's a lot like what we just saw in the other chart, and where we could say that your XLP, I think, where you're in this consolidation after, and you have a lower high overall when you look a little bit bigger picture on these charts. I'm just trying to generally throw a line near there. So you have this lower high, and you tried to rally, and it just hasn't been that impressive here in this particular ETF. And now you're at risk of losing all your SMEs. And if you do, right, that's not a good sign, and you could really roll over and start testing lows not too far in the future. So you got to be concerned, I think, there. Interestingly, like, we have XHB as a bearish idea in UOA Pro, but you can see that I don't know if it triggered off the top of my head. It may have triggered, but you can see that we've had it in there for a little while. It's not done much. I don't think it's really done much yet. And so there's not a lot to really hate about this chart. It didn't have a great week. And it's at this very moment, but it's holding right above the key support levels. And this is very common in my experience, that sectors that are really strong, they're really reluctant to give it up, right? These tend to be some of the like when you see a sector just been strong for a long time and done really well, usually the players in there are just very reluctant to want to give it up. But it's close, right? I think just to be thorough and do what's right here, we should probably just add, let's see what makes the most sense here. I think this line here is going to probably make the most sense, because it gets us the greatest number of touches. Not a perfect line. I'd have to go tweak I don't know why I didn't keep it. I guess I didn't double click the way I thought. Sorry about that, but let's just stick it right there for now. You get the idea. And that, to me, so I guess you may as well think of like the lows there, or the slightly lower low back here, 82.30. You give that up, and you've got a gap, right? And if in risk off market that might run its course over the next few months, I think your big number below there starts to become that 50 near 80. That's very clear on that. And you could go back further. There's flat lines that we got from further, but this is what I mean. Like, this is more of a topping formation than just, hey, falling apart quickly. And that's just because I think it has to do with the fact that it's been resilient, very, very strong, right in my face in terms of my economic take. This is exactly why I do not trade on my economic takes, because the market doesn't do things according to my timelines and my sentiments, that's for sure. Well, ultimately, a lot of them play out, but if you're too early with things like this, they can really make life difficult for you, to say the least, as a trader. But yeah, I think that, to me, looks like a crack of support. I'd say, look, it's finally maybe a chance that you take that counter trend trade, and in addition to that, right, treat it as a counter trend trade, right? The trend is certainly not cracked in there yet, and so get your quick trims and rolls in. And if it keeps dropping, great. And if it doesn't, you could still eke out a little profit and just say, look, I'll set alerts all over again. Maybe I'll get back in, but at least I fought against something very strong and didn't get my clock clean, because these guys are excellent at taking false breakdowns or small breakdowns, reversing them, and then making it like instantly, almost, right, hellish for the shorts. That's really what they thrive on. But XLI, right, similar. I think we'd have to say that there's a similarity to what we just saw there. Oh, I jumped ahead. Sorry. I meant to do XLB first. XLB, basic materials. That actually looks somewhat similar to the XLRE, but this looks a little worse than XLI. As you can just see, this did crack the trend, right? Notice that they did try to, once they cracked it, they tried to bring it back up, touch it from the underside, and then they let it go, right, overall. So materials are correcting. The 50s right there in gold, there's a gap. You can see that right there. That's really close to getting, it probably will get closed right if the 50 is touched anytime soon. And then you've got another bigger gap back there that could matter in a risk off scenario, but it would need to crack the 100, 200 in dashed white and purple before it obviously gets there. But yeah, I think you've got to be concerned about that. I don't really pay attention to gaps after they haven't been filled 4 to 5 days later, once they've been established. But I do start factoring them into ultimately where something can go to when I start to see the trend that produced them finally crack and then start rolling over, and that's what's happening there. I do think that what we saw there, there's enough damage there to tell me that probably that's not out of the woods yet. Right? I think there's going to be more, let's say, corrective activity overall there. Whether or not they're able to do that right away early in the week, I don't. And I mean, in terms of like joining a little scamper to the upside, I don't know. But overall, I don't like the way that looks. I don't think it's completely dead, and you should abandon all hope in it forever. I just think that it's, for now, I would expect the sellers to probably hold sway overall in there for a little while. Unless there's a news story that develops in some way, or that could energize certain parts of that sector, and then maybe it does better. But otherwise, I'm not liking that right now. You know, we did have some names in there. I'm staying away from it as a bull in a big way. I'll still put some ideas in if I see heavy UA, but not with the kind of normal enthusiasm I would if the charts look better. This one here, right, clearly, right, XLI has been hanging on really well. We noted that it wasn't, right, it wasn't too long ago, just a few weeks ago, that it was registering a new high. So it's hard to hate it that it's held on to its gains, but it is below the short-term moving averages. It hasn't gotten overdone. I do think that a little bit of damage was done, but it's really right on the brink. I think right now, like, this is one of the ones that it needs to have a little bit more downside, a few more downside closes to really bring it in line with XLB, where I'd be more concerned about it. I'd still say this one to me is barely hanging on to where I'll give it the benefit of the doubt that it's holding this recent trend for now. But I'd be really quick to flip this over into bear country and just say, yeah, that's probably got a couple of weeks at the very least of some challenged market action, price action in front of it. XLU, really, excuse me, more of a, why are you here? Only thing we could say about this is, like, look, I think rates ascending has hurt this. Could it become more of a defensive play that would boost it back up even if rates continue to rise? I guess so. I mean, it's not something we really chart or trade much. Every now and then we have a trade in there, but it really, I mean, it's just not anything that's wonderful to trade to begin with, but that's the role it occupies. But yeah, I mean, you could say, oh, well, things are maybe a little bit better. I still think overall it's down. It just doesn't look good over in the long term. Could there be a little bit of a trade? Maybe, but I mean, I'd rather trade something else on that front. But we did look at XHB and in relation to XLRE. Let's take a look at XAU. I know this is a big one for a lot of folks. They'd like to keep an eye on the metals. It's just a sector that's its own, kind of like its own thing. And, it got down to some lower levels here, relative to recent times. It's trying to maybe do a little something here. I see a little, I guess, faint hope there creeping in, but I still think it's early in here. It's still held support. It's still early. To get more excited about this, I personally would want to see a lot more action start to turn the technical momentum. As of right now, I've got it not having great technical momentum, which I don't think would be a surprise, right? Given that what's happened over the last month, at least it flatlined here. But I just don't like this right now in terms of, like, hey, this is a great momentum trade. If paper comes in, it starts to ramp, great. We'll change our tune. The only good thing we can say is that probably on this cluster low we saw this past week versus these, the technicals are better now than they were here. So you do have a little bit of a positive divergence, I think, forming there. But I just can't get excited about it yet in a big way because I see it as messy. And I see recent control really being in the hands of the sellers more than the buyers overall over the past few months. So to me, this one is not looking great yet. And I am long stuff in here, and could have sold out. That wasn't an issue for me. I could have sold out, but I don't care. I'm actually cheering against my own positions. so that I can acquire more of this stuff. And I've got some of these are share positions because options do not exist on certain names that I've got in the space. I'm long physical of gold, silver, etc. And I also have some other individual names that I'm just holding on to, mainly with stock that are very speculative. And I've got a couple that are options positions where they fit. But a lot of these things that I've got are not really, the options markets aren't that wonderful. So I'm sticking with, unfortunately, with equity. But it is what it is. But yeah, this doesn't look all that great. And like I said, lower highs up here, 3 of them relative to here, just, my eye catches. This doesn't look good. If you look at this sort of as a channel, this is one thing I like to do. I know a lot of this stuff doesn't sit well with people, but right, you've got to be faithful to yourself and what's helped you. And so if you look at that as sort of a channel, I think this is a little concerning in that this high here is somewhere near the midpoint of that channel. And you're rolling overall quickly here, right? So as of right now, the snapshot is that we were not able to ascend back towards the upper echelon, right, of this channel. And so this is looking corrective. This channel is looking like a corrective channel relative to this action here on the way down. And that would mean, right, there's another leg lower that's to follow. And that doesn't mesh with a lot of people's take on it. I get that, but you have to be objective. And I'm allowing for the possibility that if they blow through the lower side of this channel, we could have a whole nother leg lower that would maybe approximate this low. And I'm sorry, it would approximate at least some lows. I'm going back too far, but that would be a problem, right, for a bull, clearly. So don't know where that gets to. Don't want to ring that alarm yet, because there are some decent things showing up on the daily where at least it's not looking horrendous at the moment. But overall, I think, yeah, if this thing really cracks down below here, that's a problem, right? Cracking below there and cracking below here, some of these other levels, this is a monthly chart, so it's hard to really translate it, but it just looks concerning. And I'm okay with that, like I said, because I'm all about loading up at lower levels, right? I kind of based some of my purchases I was buying last summer, sort of in here. I think I want to say like, well, maybe it was July. I can't remember. It was somewhere between here and here that I was buying, and in the sector overall, and that was fine. But like I said, I'd rather have this roll over and let me get more of it. But don't know if it will, right? You can see it's sort of put up a little bit of a stand here on the weekly candle, and it's hanging in there for now. But yeah, if it breaks these lows, and you're going to then start maybe plumbing and working your way lower, and that could turn out to be a big problem. So if you're trading it to trade it, not just to accumulate it, I'm more of an accumulator than I am a trader of it. That's just how I look at it from my personal situation. But messy, holding on, bears watching kind of a thing. But usually if the dollar goes up, and it basically, if people are heading into treasuries and they're heading into, they're buying dollars or whatnot to be able to do that, and get more defensive, that usually the dollar up doesn't bode well for this thing. So the dollar really rolls with, if yields really roll higher, then you might have a problem on your hands there. So let me think about it. We do along with XHB, we do check a couple of ETFs there. We've been using wood and cut to see, right, how maybe the housing market, because we can't get lumber anymore. And that does look, right, very much like that, where a little bit more weakness, and you could see this breakout attempt end up being a false one overall, and you trend down towards the lower part of that channel. And I think cut usually looks very similar, right? So I'm just using these right now as a proxy, and it does. So you could see, right, they're kind of on their way down. They're getting messy. The charts have rolled over. So you're probably, again, without news, you're probably not looking at an instant rebound. without news, probably, right? In most cases. So it sort of tells you that this weakness we're finally seeing in XLRE and maybe early signs in XHB could be something. And it makes sense if you think about it, in my mind at least, given where rates are and where they could start to go and how unaffordable housing is. It's, as we showed in the other video, right? It's housing is historically very unaffordable right now overall. So those are a few there. We also take a look at copper. So let's see if we can get a little chart of copper here. We did look at the oil future. And this was been one of the things we've been keeping an eye on. It was, you may as well be charting molasses, sort of, but you can see here that we were thinking, okay, well, we have to respect the fact that it may be trying to break out. But for everyone that, for everyone that wonders why I talk about certain basic things so often, it's because they show up, in my experience, they show up a lot and they really matter. And when you see something like this, where it's a very clear breakout above, I think, a flat line that's an excellent flat line near, let's just say 396-ish, 397, right near there. That's an excellent flat line. And you could see this ascending triangle that was sort of in place. Look what they did, right? They get this really strong volume breakout. And a lot of authors will tell you that's exactly what you want to see. And to be honest, like, I generally would agree with that. But my caveat would be, remember, right, it's really not a breakout until you can look back on it and you can say that, no, that really was. So you have to treat this as just possible. Not that it will, but it's possible this is a false breakout. And that's the thing, right? This is where my whole quick trim reminder comes in, that people probably have had enough of hearing, that have been in our services for years. But I think if you trade something, it breaks out, even if it looks really good. Let's just use a 10 lot basis. I just think you should trim one or two, let's just say two, and then you leave 8, right? And that way, if it starts to really work its way back down to the breakout level, even though you had a little bit of theta, and so on and so forth, you could probably get out of the balance and still eke out a small profit. And then you don't feel frustrated, right? You're like, that's too bad that didn't keep going, but you still eked out a small profit, kept positive psychology, and you set an alert and you get ready to trade it again if you like it as a bull. If your opinion changes, right, where I think it should have, right, when you see a false breakout, the other thing I would remind a lot of folks of that are new, in my experience, when you get a false breakout, then you start breaking down below the support, I think, that led to it, that's telling you it's probably over, when you're getting down below that line I just drew. But the other thing is, knowing that there's a false breakout, these guys are great at doing this, right? They're great at really entrapping folks and then moving it hard against you. So that's why breakouts, when you spot them, are great technical opportunities if you're willing to trade it in both directions, right? If you are willing to trade it in both directions, because some breakouts work and they keep going, and some breakouts are false, and then usually the false breakouts get reversed very hard, just like this one did, right? So I'm not talking really here about trading copper futures. I'm talking about technical analysis on basically stocks in general. So hopefully that'll help you out if you're new. I think a lot of long-time traders are very well aware of all that, but it's just the fact that, until you get experience, you don't realize how powerful false breakouts really are as trading opportunities. It takes a little while, I think, to wrap your head around that if you're reading a lot of the material that's out there about, because there was nothing wrong with the volume on that breakout. That's another reason why volume used to be an enormous factor for Ryan and I with what we did with our custom indicators and different things we developed. But because of dark pools and options, like, we're just not as big on that anymore. We're not as big on the volume aspect because it's really it was always hard to pin down. You could do a decent approximation, but now it's, I think, even harder to pin down. But getting back to oil, just to be thorough, right, this is looking a little, right, this looks a little stretched here, but like I said, it's holding trend for now. Just keep your eyes on the fact that it's getting up there. But I still think there's room here. But interestingly, right, if they might have pulled a false breakout already, on this one, just having, gone back to it. Oh, look, we just cleared out all these highs, and then the next couple of days, it's right back down again. And then you might now get another one, right? So just keep your eye on that. Probably one of the best looking sectors to this point, even though it's approaching overbought, already is overbought on some measures. Excuse me. And I think I'm going to wrap up here with SMH. I can't think of anything else that we haven't taken a look at in sector situation, which has been very long, but we're spending more time on the charts than we usually do. And that's okay if it doesn't bother people. Just watch everything on 2x speed, I guess. But if it's too long for you, but this was what we've been waiting for, right? We said this channel was interesting here, and that you had almost like a flag, a very extended sort of long flag rising channel after this big kind of strong move up in SMH. And we were waiting for that to crack, and it was dovetailing really with the 50. And so once it cracked, and now it's worth noting, right, that this got down to on some intraday views that I have, it's gotten quite oversold. So again, it doesn't mean you can't keep getting oversold. It's just that time and time again, right, these guys usually find some way to at least temporarily lift things back up a little bit, take out the oversoldness of it, and then then there's another rug pull down the road. But it does have a gap here. If we look back further, I don't think I'd have to spend any time at all finding more gaps with the way that this thing ramped since October. There's an obvious one right there. Probably plenty of other ones if we spent time on it. But again, I'm not saying that it's all over. This thing returns all the way back down. But let's face it, when you nearly double and it might be premature, it might not be. I think it's premature, but I said that before in terms of what's happening here. I think it got overdone, like it is almost always the case. But this to me, this to me got overdone. You almost doubled in, well, I guess 9 months, roughly speaking. And so that's astounding, right? That an entire important sector does that. And now I think, right, it's looking rough in there, but it may be a little overdone. But if it doesn't finish out the month strongly, right, they would have to really fix this in a big way by coming after it. And if they do that, it could save things. But if they don't do that, I think the technicals are going to take a turn that's going to suggest that there's more, let's say, at least volatility, and realistically, though, probably more downside. And we could probably put a decent line under this action right about there, just ballparking, and you get the idea. So somewhere near that rising 100 SMA in dashed white is our line, and an overshoot would probably put you towards that gap fill, which is way down there. But this thing falling apart just doesn't augur well for the market, right? It's such an important sector. It's been a leader. This stock has been the leader of the leaders, right? NVIDIA. And you could see that, to me, like, that just doesn't look good. A little bit more slide, and ultimately you start wondering if that gap fills, and that's way down there, right, from where it was at 481 nearly. And this is, something nearly everyone's going to keep their eyes on. And so the gang does have, right, something to work with there in about 10 days, though, right? So I don't know if what they'll do is try to create a pre-EPS rally in there, if they'll just let it get swamped now and then use good earnings and forward guidance to jam it back up. It's too early to tell. But overall, they're at risk of inviting, I think, more technical damage to this the longer they let this go. And that's just not in the short run, maybe, but overall. So yeah, I think that's a really big problem. And just remember, right, this thing went up $370, roughly speaking. So it almost went up 4 times of that low value. Not quite, but you get the idea. I mean, 3+ at least, right? 3x plus is what it did from the ACK lows to the recent highs that it registered right in July. So just an extraordinary run, even though this is not even the best stock out there over that time frame. But a big leader like this having trouble. Another big leader would be obviously Apple. This one, to me, this is also another one to me that could have more trouble. If they risk not rallying this thing here and it starts to really get whacked even lower towards some of these other SMAs or these other retracement levels that I've got in here, this would be very problematic in terms of the indexes, because they really have to do a lot of overtime work, yanking a lot of other stocks up in a big way to really counterbalance a massive weight like Apple getting thrashed. And so I don't think this looks good right now. The best thing we could say about it is that it's oversold, and it's maybe it too will put a relief rally together. I think that would not be something you would say is a low probability event. I have no idea what news is coming out in there. I'm just saying the gang rallying and oversold Apple, where it's all in their best interest to do that. That's not a shocker probably to anyone. But eventually, if it did do well enough, it would run into a lot of downsloping SMAs that are waiting for it. And so its chances of pushing through there and holding, I don't think would be that great. But again, I don't know the specifics of Apple. I just think the technicals, short-term oversold, but if they even if they rally it and it doesn't get far enough and they roll it back over, that could be a problem for it and the market. So just probably worth noting. So probably should wrap it up there. Been a really long sector situation, but I thought it was worth it at this juncture with so many things that need to hold on to really keep this market intact. So many things on or near support levels that are important. I do think overall for now, I would say that they've been distributing stocks now for the last few weeks. I think there's clear that sellers have really tried to assert themselves and take over, and they've been selling rallies for now on balance. So not a good sign. Right in line with our third year, though, still. So we'll give the third year scenario or analog its benefit of the doubt to this point still, like we talked about in macro measure. But yeah, I think there's more retracement of everything to come. I just don't know if you just keep getting it right in your face this week, or especially early on. I would think early on they try to put a little save together, get a little bit of this short-term approaching oversoldness maybe out of this market, or they have a little more weakness, get it officially oversold, and then try to put something together on turnaround Tuesday, Wednesday. But remember, ultimately, keep your eye out for news developments that may override those most likely scenarios. And those are not highly confident most likely scenarios. Those are probably just slightly the majority over other ones I've got in mind. But more importantly, I would just tell you, I think you should keep your eye on the dollar DXY, and especially TNX, because if they keep moving this thing up, I do think the equity bulls can kind of ignore that for a while. But if this keeps going and you start making new highs on this, I think there's going to be a reckoning. I think that will be a big issue. I guess I'm too old school to think that interest rates don't matter anymore. But maybe I'm wrong. Maybe this time it's different. But yeah, I think higher rates are not going to be a joke. Given where valuations are in the market, there's no premium. You're getting no advantage, right, over buying stocks right now in terms of the yield that they'll give you relative to history versus just simply going into 10-year treasuries, and so that are theoretically risk-free. I'm not so sure I buy that, but they're theoretically risk-free. So on that note, let's wrap it up, and I'll just thank everyone for tuning in. Tried to cram as much as I could in. Hopefully something I share with you does help you out this week or in some week in the future. And stay nimble out there. Be happy with singles and doubles until you see a definitive break one way or the other. News or the TNX or dollar could tip you off to that. And until then, right, just stay nimble out there, and I think you'll come out of this okay. And I do think once we get through this consolidation phase or corrective phase that we're in, depending on how things play out, we'll eventually get back to a strongly trending phase, and it'll be a little bit more fun maybe than the last couple of weeks. So everyone take care. Have a great conclusion to your weekend, and I'll see you in the week ahead.